Hello, this is Jordan. This video is being recorded on the early afternoon of Tuesday, November 8th, 2022. Thank you so much for joining me today. In this video, I'm going to discuss the technicals of the gold stocks, GDX and GDXJ, and intermittently I will opine on the potential that the bottom is now behind us, as well as the significance of today's move on the back of some strength last week. And so looking here at GDX, I'll just talk about a couple of things here. First, there have been numerous breadth divergences here, which you can see in this chart. We have GDX at the top, then we have the advanced decline line, then we have new 52-week lows, and at the bottom, that's a percentage of Huey stocks. I mean, it's similar to GDX, percentage of Huey stocks above the 50-day moving average. So starting at the bottom with that was already starting to show a positive divergence and trend higher before GDX did. That data hasn't been updated since last week. I bet we're close to hitting 100% of the Huey stocks being above the 50-day moving average if it hasn't already happened. The new 52-week lows, I mean, that's kind of an old insight, but you know, the new 52-week lows, if we use a smoothing mechanism there of the 10-day moving average, that peaked on the downside before GDX did. Same thing with the advanced decline line. It bottomed before GDX did. So you see these positive divergences, and you see many of them at the same time. They can be around turning points where a lot of these indicators, they bottom and then they make a higher low when the market itself actually bottoms. It happens the same way when you're making a significant top in a market where a lot of the indicators, which, you know, they're measures of strength, they peak, but then the market is able, because there's so much momentum, it's able to make you know, one new high after that and set up these negative divergences. Of course, different situation with the gold stocks, lots of positive divergences. Looking at GDX, I mean, it's not a perfect head and shoulders bottom. I mean, if you look at a weekly chart or just a long-term chart like this, it doesn't look like a textbook inverse head and shoulders bottom. But I mean, it's close enough. And you can see, I mean, there's been multiple attempts on the downside, you know, to go below 22.5. I mean, 1, 2 held there 3 times. One time it went below. You get the nice push now. So there's going to be some momentum behind this move, and I think it's not a stretch to say, I mean, GDX is probably going to reach 30, right where the 200-day moving average is. So you have a confluence of resistance there. So I think that's a very reasonable expectation, is to rally up to 30. Now, looking at GDXJ, I mean, a similar picture. You know, you have the 37 level. That's a clear area of resistance. And then you look at the 200-day, which is exactly at 37.00. So confluence of resistance at 37. GDXJ closed just below 32. So again, it's reasonable to think you're probably going to see this move continue up to 37. And, you know, looking at the support levels from GDXJ, you know, when it was trending down, trying to figure out, I remember highlighting, excuse me, I remember highlighting 25.26 as an important support level. But then as it was going down more, I said, well, you know, maybe this could spike down to, you know, there's an open gap at 24, maybe even 22, 23. And of course, you know, that wasn't able to happen. It basically bottomed, I believe, at 26. It got into the high 25s. You know, the positive divergences, same thing. I mean, percentage above the 50-day, you know, that's been trending up. New 52-week lows. I mean, that basically peaked out in early July. So big time positive divergence there. I mean, GDXJ against the S&P, another positive divergence there. So, I mean, all these things are really significant. They hinted that we could get this type of move. And, you know, after last week, the miners as well as silver especially, you know, they were bumping up against significant resistance, and especially the miners. I mean, if they could just push higher, get some more buying, the dam could break and they could have room to continue that move into the end of the year. And so I think that's what we're going to see here with GDXJ and GDX rallying up to the 200-day moving averages. I mean, if you're looking at a measured upside move from the inverse head and shoulder pattern, I mean, that does give you a little bit higher than these targets. But again, I mean, if I'm looking at a weekly chart, that pattern isn't as prevalent as it is on the daily chart, and it is a little rough on the daily chart. So I'm more comfortable saying that we're going to rally up to the 200-day moving averages. And so, bigger picture, I mean, it really doesn't make any sense to call bottoms. I mean, it's not that helpful. But with that being said, this is generally the time that you want to buy. Even in the last couple weeks, I mean, I remember writing some editorials about charts look the worst at their bottoms. A lot of things are setting up. We have these positive divergences, and so it's very tough to buy when it's the actual bottom. I mean, just look at this chart. Look at March of 2020. Look at the end of December or January 2016. Look at late 2018. Look at these lows and look at how the charts, they did not look good. They looked their worst right before bottoms. And, that probably was the case at this bottom. And I think, obviously, there are important fundamental developments at those turning points. And it's, and I'm a chart guy, but a lot of chart guys, they don't factor in any fundamentals or any macro developments, which, frankly, I mean, they determine how significant these lows and tops and turns in the market are going to be. And if we're looking at fundamentally for precious metals right now, we know that real interest rates, they tend to peak when the Fed stops hiking. I mean, we know that, especially when a market has been, when gold and precious metals and gold stocks, when they've been very weak during a hiking cycle, they tend to bottom around the end of that hiking cycle. And we're coming towards the end of that hiking cycle. And so that's, and the fact is, you look at how poorly precious metals have performed. I mean, they've already discounted, maybe they've discounted all the hiking and the Fed tightening. And at the same time, the stock market's rallying now, but if you look ahead to next year and you think we're going to be in a stagflation situation and employment starting to get a little worse. And so if we're looking out 3, 6, 9 months, we're looking out at a probable recession, higher unemployment, the stock market falling below 3,500, confirming a new secular bear market. So all these things are lining up that are in our favor. They're in the favor of being bullish precious metals. Some people could say, oh, well, we're going to get a huge move. There's going to be a liquidity event, a big crash. It's going to take everything down. Folks, when that happened in 2008 and 2020, when you look at what happened going into those market crashes that we had, precious metals were performing really well into those, into those points, into those peaks in the market. That's why they sold off considerably with the market. And so, they've been in a cyclical bear market for 2 years. So it's a much different situation. So the stock market getting worse, losing 3,500, that's going to force the Fed to have to cut rates eventually. And who knows? I mean, today we could be seeing, the last week we could be seeing it, the start of capital, flowing into hard assets and precious metals especially. I mean, as to the sustainability of this move, we want to see more economic weakness. That's the key, because in the stagflation trade, if there's not, if the economy's okay, it's not really that weak, but it's not strong, that's going to favor capital going into energy, industrial metals, those areas. But if we're in a stagflation situation where unemployment is really starting to rise, there's a recession, the Fed's going to have to ease policy, that's when gold, silver, precious metals, that's when they're really, really going to outperform. So pay attention to those narratives and what could be developing in the coming days and weeks. But, with all that being said, I mean, this is, you want to be a buyer, you want to look for the stocks and the juniors especially that have strong fundamentals. They're cashed up and they really haven't moved that much yet. That's all for this update. Thanks for listening, and I'll talk to you guys again in the next update.